Hello, hello student. Please tell me, am I audible?
Yeah, usually.
Okay. Wait a minute. Please inform other students as well so they can join the class. If you are in that students group, please inform other students as well. Invoice price method. Okay. So in last class, we have discussed the branch account with the cost price method. Now we will be discussing the invoice price method. Today we will discuss the invoice price method. I hope you have dropped a message to that group, and without any further delay, we are just starting our class. Okay, invoice price method. So in this invoice price methods, goods are put it at on the invoice price. Goods are calculated at on invoice price means higher than the cost. If a good cost 100 bucks, if a good cost is 100 bucks and its MRP is 125 bucks, so we will cast 125 bucks in this method, not the 100 rupees, not the 100 bucks. Okay. In such a situation, all entries related to goods are made in the branch account at invoice price only, at invoice price, and necessary adjustment for loading are recorded at the end by passing the following additional journal entries. And the loading is the difference between the invoice price and the cost price. As I have given you the example of 100 bucks a unit, a goods unit cost 100 bucks at its cost price, and now its invoice price is 125. When you deduct 100 out of 125, you will be seeing a difference of 25 bucks. So that 25 bucks will be known as loading. The difference between invoice price and cost price is loading. And we will see the journal entries for the same. For adjustment of loading in opening stock at branch, how we will adjust the loading amount in opening stock at branch. So we will pass an entry stock reserve account debit to branch account, stock reserve account debit to branch account. For adjustment of loading in goods sent to branch, less returns branch. Branch account debit to goods sent to branch account means the goods you have sent on invoice price, now they are being sent back to the head office. So in that case, the entry would have been for the adjustment of loading would have been like branch account debit to goods sent on branch. For adjustment of loading in closing stock at branch, when we will be closing the account, closing the entries, the recording the closing stock of that branch, so the entry for the same would have been branch account debit to stock reserve with invoice price, branch account debit to stock reserve with invoice price only. Now we will see an illustration about the same. Illustration number 4. Illustration number 4. The Mukund Gas Company, Varanasi, have a sales branch at Ghaziabad. Mukund Gas Company, Varanasi, have a sales branch at Ghaziabad and invoiced goods to the branch at cost price plus 33 1 by 3%. 33.33%. It is arranged that all cash received by the branch is to be paid daily to the head office. It is to be paid daily to the head office. Account with the Banaras State Bank Limited and the necessary advice sent to the head office. Okay. From the following particulars, prepare the branch account and goods sent to branch account in head office ledger. In head office ledger, showing the actual profit and loss of branch for the year ending December 31st, 2018. December 31st, 2018. Okay, we have given some data. Here it is, stock on 1st January 2018 means the opening stock, and it is also available at the invoice price. The amount is 12,000 rupees. Goods sent to branch, head office sent these goods to branch at invoice price only during the year, which is cost 96,000, and these goods are at invoice price. It means it has added 33.33% in the cost price. Okay, that means if the cost price was 100, if the cost price of a unit is 100, then this amount shown here is 133.33. 133.33. Okay. Debtors on means opening debtor. These are 1500. Cash sent to the head office during the year is 77,100. All right. Sales we have made during the year of 77,000. Rent, rates, and taxes we have paid off 3,200. Salaries and wages expense we have made for worth 4,800. Debtors on 31st March 2018 were 1,600. Goods returned to head office is 16,000 at invoice price. It is returned, and the shortage of stock at invoice price is 200. Shortage of stock at invoice price is 200. So the head office is at Varanasi, and the name of head office is Mukund Gas Company in Varanasi. So in the books of Mukund Gas Company Varanasi, we are creating this account in the books of head office. Okay, and Ghaziabad was the branch. So the Ghaziabad branch account is mentioned here. First of all, first of all, the balance brought down means the opening balances for the branch stocks and branch debtors. The opening balances of branch stock was to 12,000, and the debtor was of 1,500. Opening debtors was 1,500. So we have mentioned it here. You can see it again. Now goods sent to the branch. Goods sent to the branch. Please turn off your mic. Goods sent to the branch. It is shown here. We have sent the goods to the branch of worth 96,000, and these amount is at invoice price. Remember that it is not a cost price. It is a invoice price. Here it is 96,000. Now all the receivings we have made during the year is we have received cash. We have received cash from the branch, and it is here by cash received 77,100. We have received some goods returned to the head office. It will be credited here 16,000. All right. Stock reserves at the end of the year. Stock reserves at the end of the year 3,000. Buy buy goods sent to the branch account. Loading in goods sent less returns 20,000. We have taken it from the data. Wait, let me show you where it is. Yes. So the salaries and wages we have paid of 48,000. The head office have paid it. And the rent, rates and taxes they have paid of 3,200. And it is mentioned here. Okay. The stock reserve account. We have got the total stock is 12,000, and the stock we have sent to the head office is 16,000. Stock we received during the year, means the goods we received during the year, is 96,000. When we calculate all this, we get stock reserve account loading in closing stock, that is of 3,700. And we will leave this account here only and move to the next account for some of the data. Goods sent to branch account. This is the direct this is the direct account of goods sent to branch account. Here, the goods have sent is 16,000 as the opening stock. Okay, 96,000 to the Ghaziabad branch, 96,000 to the Ghaziabad branch, and goods sent to branch account debit to Ghaziabad branch account is 80,000, and the difference here is 20,000. Difference here is 20,000. When you calculate, because this is the goods amount at invoice price, this is calculated at invoice price. It is 125% of 100, but when you calculate it, the amount comes only 80,000. The amount comes of that 80,000, and we will send this amount is as 20,000. And when you calculate both the side, this will show a credit balance, and to nullify the effect, we add this 60,000 as we will send this or transfer this to the trading account. We will transfer this to the trading account, and this 20,000 will be shown directly here in the branch account in credit side by goods sent to the branch account. Goods sent to the branch account. Loading in goods sent less returns. Okay. After doing all this, you will have to make a memorandum branch stock. A memorandum branch stock. In this, you will show the branch stock balance, opening balance 12,000, goods we received from the head office 96,000. Okay, goods we have returned to the head office of 16,000. By sales of goods we have made during the year is of 77,000. The shortage of stock is of 200, and when you calculate both the sides, When you calculate both the sides, it will show a debit balance, and this balance will remain of 14,800 shows we have stock of 14,800 remain to our factory, to our branch. And it is mentioned here. That's how we create invoice branch account. Okay, moving further, coming to the final account system. To the final account system. So, the profit or loss of dependent branches can also be worked out by preparing a memorandum branch trading and profit and loss account. This account is prepared on the basis of cost of goods, on the basis of cost of goods sent to the branch, not at the invoice price, not at the invoice price. Apart from the branch trading and profit and loss account, the head office also maintains the branch account. In this final accounts, head office create 2 to 3 accounts: branch trading account, profit and loss account, and branch account as well. Branch account as well. But under the system, the branch account is the nature of personal account. Under the system, the branch account is the nature of personal account, because branch will become an artificial person for head office. So that's why it will be treated as personal account, which shows only the mutual transaction between the head office and the branch. It only shows the mutual transaction between the head office and the branch. The balance of branch account therefore represent the net asset of the branch. Let's see this example as well for the better understanding. And whenever you prepare this block of branch, just try to make a flow chart of branch account. Try to create a flow chart of branch account. It will be easier for you to understand it. Okay, illustration number 5. A1 Limited, Bhopal has a branch at Madras to which the goods are sent at cost plus 25%. Okay. The Madras branch keeps its own sale ledger and remits all cash received to the head office. Means जो भी whatever the Madras branch keeps its sales ledger, only they only prepare the sales ledger and remits all the cash received to the head office every day. Means deposit all the amount they receive for selling the goods to the head office. All expenses are paid by the head office. The transaction for Madras branch during the year ending December 31st, 2018 were as follows. What they have mentioned is stock, means the opening stock for the year 2018 is 11,000. The opening debtors for the year 2018 is 100. Petty cash 100 rupees. Cash sales of worth 2,650. Credit sales 23,950. Goods sent to branch 20,000. Collection on ledger account 21,000. Goods returned to head office 300. Bad debts 300. Allowance to customers 250. Returns inward 500. Checks sent to branch like rent for wages, for salary and other expenses 600, 200, and 900 respectively. Stock at the end of the year is of 13,000. Debtors at the end of the year were of 2,000. Petty cash at the end of the year, it includes miscellaneous income of rupees 25 which is not remitted. So it have mentioned it here 125. Means this 125 include 25 rupees of miscellaneous income, which was not remitted to the head office. Now prepare a memorandum branch trading account, trading and P&L account, and Madras branch account for the year ending December 31st, 2018. So here we have the solution. The trading and profit and loss account for the branch for the year ending 31st December 2018. The opening stock balance is 11,000 minus 2,200. It is 1 by 5 of loading. It is 1 by 5 of loading. See, here it is written the goods are sent at the cost plus of 25%. The goods are sent at the cost plus of 25%. Means if the goods worth 100, if the goods worth cost is 100, then we have sent it for 125. This is 25% of 100. Okay, so we have sent it for 125 and this shows 125%. This amount is for 125%. Now, to calculate it, we have just calculated the 1 by 5 of the loading for the same, and that amount is 2,200. And when we deduct it out of 11,000, we get the cost price. We get the cost price, which is 8,800, which is 8,800. Good sent to branch. Same goes with that. We have sent good to branch for worth rupees 20,000. For worth rupees 20,000. Okay. Now, this is from where this amount have come. Suppose the amount was X. The amount was X plus it carries 25% of X plus it carries 25% of X equal to 20,000. Then it become 20,000. Now, if you see the left hand side X plus 25% of X, you will get, or you can just write it, 125% of X. You can just write it, this 20,000 is 125% of X. 125% of X. And to find that X, to find that cost amount, you just need to solve this equation. I don't have a pen here, otherwise I would have written it. So you just need to put it to the right hand side in reverse. That means 20,000 into 100 by 125. 20,000 into 100 by 125. I'm repeating, 20,000 into 100 by 125. And the amount will come of 16,000. The amount you solve, the amount you get after solving this equation will be 16,000. I hope you understand this thing. It's the basic math. Now the wages we have paid off rupees 200. It is written here in the trading account. As you know, the wages must be put it in the trading account, and the salaries must be put it at profit and loss account. The rules will go same. By sales, cash sales we have made during the year is of 2,650. Credit sale they have made during the year is of 23,950. This is the total sales when you add both of this. And the returns, sales return was of 500 rupees. Sales return was of 500 rupees. So when you deduct it out of 26,600, you get the amount 26,100 rupees by sales. Buy goods sent to headquarters account, debit to branch trading and P&L account. Buy goods sent to headquarters. We have sent the goods of rupees 300, I guess. Bad debts. Bad debts were of 300. And This amount is also at invoice price, means 125%. So the loss we actually made is of 250, means 125%, 125 by 100 into x is equal to 300. And when you solve the equation, you will get the amount of 240 rupees. The closing stock at the end of the year was of 13,000. It was also at 125%. When you solve it, you will get 10,400. And when you calculate both the side, credit and debit, it will show a credit balance. It will show a credit balance. And here, for the balancing, you need to put this amount under the name of gross profit, under the name of gross profit carried out, and this will be sent direct to the profit and loss account. This will be sent direct to the profit and loss account. After this line, we have profit and loss account here. Above this data, we have trading account, and below this line, we have P&L account. So all the bad debts of 300, it is mentioned here. Allowances of rupees 250 is mentioned here. Rent and salaries and other expenses also mentioned in P&L account. And the income, miscellaneous income, which was mentioned in the petty cash, is of 25. It is mentioned here. Gross profit, we get it from the trading account. It is mentioned here. And when you calculate both the side, also again it will show a credit balance, and you need to put it here. You need to put this amount here for the balance under the name of the profit transfer to general profit and loss account. Okay. Madras branch account. Madras branch account. This was trading and P&L account. Now this is Madras branch account. This is Madras branch account, and everything has been put it the way we put every entry in branch account. There's nothing new. I hope you understand it. So let's move further. Stock and debtor system. Stock and debtor system. Under stock and data system, the head office doesn't open a branch account in its books. In stock and data system, head office doesn't create or doesn't make any branch account in their books. Even it maintains a few control accounts for recording the various branch transactions. These accounts usually are branch stock account, branch debtor account, branch expenses account, branch cash account, goods sent to branch account, branch fixed asset, and all these kinds of account a branch or a head office maintain under the stock and data system. Under the stock and data system, the head office maintain all these accounts. Okay. At the end of accounting year, it prepares the branch adjustment account and the branch profit and loss account. It prepares the branch adjustment account and the profit and loss branch account. This system is used only when goods are invoiced at selling price, which the branch is not allowed to vary. Where we will put the system, on it is useful only when goods are invoiced at selling price, not at the cost price but at the selling price, which the branch is not allowed to vary. Means branch needed to sell the goods at the selling price only. They can't sell it further. Okay, they can't sell the goods on the higher rate. So just leave these entries. We will straight go to the question. Okay. And there only we will get the entries. I hope now you know how to create journal entries out of these ledgers. So just read this illustration. Indiana Traders Jaipur opened a branch at Jodhpur on 1st June 2016. 1st July 2017. The goods were sent by the head office to the branch invoiced at selling price of the branch, which was 125% of the cost price of head office. Again, 125 percent of the cost price of head office. If the cost is 100, then the selling price is 125. That's what it's mean. The following are the particulars relating to the transaction of Jodhpur branch. Here, some entries are given to us, and we will prepare the accounts stated in here. Ascertain the profit and loss for the Jodhpur branch for the year ended June 30, 2018 by preparing the accounts under the stock and data system. Preparing accounts under the stock and data system. Okay, let's start. First, read this. Goods sent to branch at cost to head offices 2,80,000. 2,80,000. It is at cost price. But remember, we need to put it at selling price, means the invoiced price. Sales cash 1,24,000. Credit sales 1,75,000. Cash collected from the debtors is 1,56,000. Discount allowed, it is 4,000. Spoiled clothes in bales written off at invoice price is 500. Cash sent to branch, wages of 3,000. Okay, freight 11,000. Other expenses included. Go down rent is 6,000. Go down rent is 6,000. And when you calculate this amount is come 20,000. Stock on June 30, 2018 means at the end of the year is 55,500. So we will prepare the first account out of these information. Branch stock account. Branch stock account. Remember this. This account is related to the stocks only. Okay. And remember one more thing. If stock increasing in your branch, then it will go directly to the debit side. If stock is decreasing from the branch, then it will go to the credit side. Understood? Stock increasing means stock is coming to the branch, that means debited side. And if the stock is going out of the branch, that means credit side. So let's take it one by one. First thing, goods sent to branch 2,80,000. It is at cost price, cost to head office. But now the amount we need at the selling price, so we need to put 125% of 2,80,000. And when we do 125% of 2,80,000, the amount we get solving this is 3,50,000. 3,50,000. And as you can read, goods sent to branch means we are having an increase of stock in the branch, means goods are coming to the branch, so directly put it on the debit side. We have put it on the debit side with an amount of 3,50,000. And sales, cash sales and credit sales, it is of 1,24,000. So goods are going from the branch, directly put it on the credit side. By cash account 1,24,000. Sales of credit is 1,75,000. As you know, the credit sale is shown under the name of by branch debtor, because when you do credit sales, when you do sale on credit, the person who are purchasing the goods from us on credit will become our debtor. will become our debtor, and now that person will become the debtor of the branch debtor. So that's why we are putting it under the name of branch debtor, and we have account for the same as well. And here the amount is showing 1,75,000. Here, read this point. Spoiled cloth in bales written off at invoice price means this is 125% of X. This is 125% of X. X means the cost value. X here means the cost value. Whenever I say X, that means the cost value. Okay. 125% of X. This 500 is 125% of X. Means it have a loading. Loading means the difference between invoice price and the cost price. It includes loading as well. When you put it 125% of x is equal to 500, so the value of x will come 400. The value of x means the cost value will come of 400, and the difference between the cost value and the invoice price is 100 rupees. The difference between the cost and the invoice price is the 100 rupees. So we are mentioning it here under the by branch adjustment account spoilage loading, it is of 100 rupees. And and branch p&l account, branch p&l account means spoilage cost, the remaining 400 rupees under the name of p&l account. We have just put it here, 400. And when you calculate both the side, okay, we have sales return as well. We have sales, no, stocks. Yes, stock at the end of the year. Stock at the end of the year, here we have, here we didn't have any opening stock, we just have goods sent to branch, but have a closing stock. And you know, we mentioned the closing stock by balance carried down here with the amount of 55,500. And when you calculate both the side, this will show a credit balance with amount rupees 5,000, and you will put that amount under the name of two branch debtors account. So that's how we create branch stock account. Now moving further, we have created the branch stock account out of this data. Now we please write it down. Whatever you want to say, please write it down. Goods sent to branch account. Goods sent to branch account. Yes. The first thing is to branch adjustment loading 70,000. Goods sent to branch account. In this, we had the cost price of 2,80,000 and the invoice price we get it of 3,50,000. And the loading between these two is 70,000. Means the difference between these two is 70,000. So it will be sent to the goods sent to branch account on debit side to branch adjustment account loading. Goods sent account goods sent to branch account debit to branch adjustment account means loading of 70,000. And the trading account is of 2,80,000. Trading account is of 2,80,000. It is the cost price, it is the loading, and here we have the invoice price. Here we have the invoice price, and it is creating a balance. Branch debtors account. Now, the to branch stock is 1,75,000. By cash, we have sold the stock is of 1,56,000. By branch stock account means the returns we have created is of 5,000. By branch expense account means the discount allowed. It was mentioned here of 4,000. Here, discount allowed. So we have put it under the branch debtors account here. And When you calculate both the side, it will show a debit balance and the balance is 10,000. Balance is 10,000. I'm waiting for your query. Abdul Ibrahim, you wanted to ask something? Please write it down. Similarly, we will create branch expense account, branch adjustment account, and branch profit and loss account. In branch profit and loss account, all incomes and profit are to be credited here, and all losses and expenses would be putted here only. And this branch adjustment account, it is related to the loading account, means the loading we have created during the transactions. It is related to the loading, invoice and cost difference. Are you writing?
We are done.
What was your query? Abdul Ibrahim, what was your query? Okay, now I am moving forward. So after this unit, we have come to the branch account second. Branch account second. In the last unit, we have seen the accounts for the dependent branches, the accounts for the dependent branches. But in this unit, we will see the accounts for independent branches. How independent branches maintain their accounts or books of accounts. When a branch functions as an independent unit and enjoys certain amount of operational autonomy, it keeps full system of account. Such branches are termed as independent branches and maintain complete set of book on double entry system. They prepare their own trial balance, profit and loss account and balance sheet. As you have seen, under the dependent branches, only head office are creating the accounts on behalf of branches. But under independent branch system, the branches and head office both are creating, branches and head office both are preparing the accounts on their behalf, the accounts on their behalf. Okay, means the branch is preparing head office account, branch will be preparing head office account, and head office will preparing the branch account, head office preparing the branch account. And when I say branch is preparing the head office account, I do not mean that that particular branch is preparing all the accounts of head office, no, but they are preparing the head office account, that particular head office account from where they are connected with each other. Okay. Accounting system of an independent branch. The branch maintains complete set of books on double entry system. Second thing, the branch opens head office account in its book. It is a personal account wherein all transactions between the branch and head office are recorded at branch level. At branch level, the head office also maintains a branch account in its books for all transaction, and it makes with a particular branch. It makes with a particular branch. At the end of the accounting period, the branch prepare its trial balance and final accounts and send their copies to head office. Send their copies to head office. As soon as head office receives the trial balance from branch, it compares the balance in head office account as shown in the branch trial balance with the balancing of branch account as it appears in the head office books. That means, as we know, in independent branches, branch also prepare the head office account and head office also prepare the branch account. So what happens when the year ends? When the year ends, they just send a copy to each other. Generally, the branch send a copy of their final accounts to head office, and head office do only one thing. Compare. They just compare both the accounts which they have prepared for us and which we have prepared for them. Okay, they just compare it. And when the balance is equal, when the balance is equal, then that is okay. If it is not equal, if it is not equal, there is any difference in the balance of both the accounts, both the books, then we will be having a reconciling, we will be having a reconciliation. Okay, we will see where we did a mistake. Is it clear? Now some peculiar items. What are these items? Goods in transit, cash in transit, head office expenses chargeable to branch, depreciation, inter-branch transactions, and some etc. Now understand it and please focus on it. Goods in transit, what it means? Now suppose your year is ending on 31st March of any year. Okay, you have an accounting year which ends at 31st March on each and every year, and you have done a deal, you have sent some goods. Being an headquarter or head office, you have sent the goods to a branch on 29th of March, 29th of March, and within 2 days the accounts are closing, the books are closing. So you just pass the entry. Whenever you send the goods to the being an head office, whenever you send goods to the branch, you just pass the journal entries. But 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 branch will not pass the entry because they haven't received the goods yet, because they haven't received the goods yet. You have sent it via ship. Okay, and it will take minimum 7 days. Suppose it will take minimum 7 days, and the year ends between this. So how it will show a balance between both the accounts? When on the 31st March the accounts are sent, the branch account are sent to the head office, there will be a difference in this case. So to avoid this difference, we create an adjustment entry, we pass an adjustment entry, and these adjustment entries are here. If the head office decide to pass the adjustment entry, means only one party, either head office, in this case only one party, either head office or the branch, pass the necessary journal entry in their books of account. Note, they do not pass the this entry both in their accounts. Only one out of them will pass this entry in their books of account. And one more thing to it is, generally in normal life, head offices pass this general entry. Head office is the one who pass the general entry. Okay, generally it happens only head office passes this journal entry. Just to avoid this kind of goods in transit thing, Head office passes the entry like goods in transit account debit to branch account. Goods in transit account debit to branch account. And if in some cases it is mentioned that branch is passing that entry, then you need to put the entries like goods in transit account debit to head office. Goods in transit account debit to head office in branch accounts in the books of branch. Is it clear? Is it clear till here? I'm asking something. Am I not audible?
Yeah, yes, ma. Yeah.
Okay. Now we have read the goods in transit. Now we will see what happens in cash in transit. Means we have sent the cash. Sender have sent the cash, but it is not received. It is not received by the receiver yet. And it is the year's end period. You need to finalize your account. You need to prepare the final accounts and send your copy of account to the head office. And again, if they compare both the accounts, it will show a difference. Why it will show a difference? Because head office, the sender have mentioned the amount they have sent to you, and because you haven't received it yet, the branch haven't received that amount yet, that means they didn't pass the general entry for the same, and it will show a difference in the balances of both the books. So to avoid this as well, we created two types of entry, and again, both of them will not pass this entry. Only one out of them, means head office. Generally, head office only passes the entry for the same. Okay, the entry would have been like cash in transit account debit to branch account. If head office is the one to pass the general entry for cash in transit to avoid the difference, then the entry would have been cash in transit account debit to branch account. Cash in transit account debit to branch account. And if in some cases branch, it is mentioned that the entry must be passed in books of branch, then the entry would have been cash in transit account debit to head office account. To head office account. Third one, head office expenses chargeable to branch. Head office expenses chargeable to branch. Generally, you have seen branch take all the money. Branch take all the money, even to run the daily day-to-day activities. They take money from the head office. But there are certain cases where head office charges some expenses to branch. And what are these case? What are these case? Suppose you are an employee of head office. You are an employee of head office, and you are said, you have said, or you are commanded that you need to go to the branch and do some audit work. Do some audit work, and for 2 to 3 days you are working in the branch. So for that case, for these days, branch is entitled to pay you salary. Branch is entitled to pay you the salary. So for that case, it is considered that head office expenses chargeable to bank, or head office expenses chargeable to branch. So branch will pay your salary for those days. And the entry for the same would have been like branch account debit to expenses or salaries account, being head office expense chargeable to branch. And the branch will also pass a correspondence entry in its books like head office expenses account debit, head office expenses account debit to head office. Ultimately, the money is coming through the head office only. So the entry would be head office expenses account debit to head office. Fourth one, depreciation on branch fixed asset account maintained by head office. See, usually the fixed asset account is maintained by the head office. In general branch accounting, the head office maintains the fixed asset account. So, so it is the responsibility of head office only to put all the purchasing, selling, and depreciation of the account. But no, sometimes only branch will pass the entry of depreciation. Only branch will pass the entry of depreciation, not the head office, not the head office. And again, one thing, branch will only pass the entry of depreciation only, because depreciation account debit to head office, you have seen this generally. How do we pass the entry of depreciation? If depreciation is putting on the machinery, that generally we pass the entries like depreciation account debit to machinery. If we are putting a depreciation on any asset, then the entry would have been like depreciation account debit to asset account. But you see the difference here, depreciation account debit to head office account. Why we have mentioned the head office here? Because the fixed asset doesn't belong to the branch. The fixed asset is belong to head office only. That's why we have put it the head office instead of the fixed asset name, instead of the fixed asset name. Understood? Now, in some cases, when head office is not maintaining the records, sometimes head office doesn't maintain the record. They just give it to branch to maintain their record to prepare all the final accounts. In that case, branch can pass the entry for depreciation. So the entry would be branch account debit to branch fixed asset account, branch account debit to branch fixed asset account. It is depreciation account debit to branch fixed asset account. Inter-branch transaction. What is inter-branch transaction? We have seen the transactions of goods between the trading of goods between the head office and the branch. But sometimes an head office have 4 to 5 branches, means branches which are more than 2 branches. So in that case, if those branches are dealing with one and self, in that case it is known as inter-branch transaction. If branch A send goods to branch B, then it will be known as inter-branch transaction. It will be known as inter-branch transaction. We have an example. A branch may be asked to transfer its surplus stock to some other branch, which may need the same. In such situation, the usual practice for the sending branch is to regard it as a transaction of returning the goods to head office. Similarly, the receiving branch shall regard it as the transaction of receiving the goods from the head office. Hence, entries are passed on the same basis in the books of account, branches and head office. What it is said, we had a transaction between branch and branch only. Suppose this is the branch and this is the second branch. Okay, and this is the head office. What we generally do, we have left some stock. Branch A have left some stock, and head office have a requirement from branch B for the same stock, in that case head office intervene and say to branch A to send the goods directly to branch B, send the goods directly to branch B. Otherwise it would have been like branch A send the goods to head office and the head office will send the goods to branch B. It will cost more, it will take more transportation fee, more transportation cost. So branch A directly send the goods to branch B, and the entries we are passing in our books of account will not mention the branch name, instead even they just pass the entry from branch and head office, like just branch and head office in the books of head office. In the books of head office is like receiving branch account debit. In the books of head office means in the accounts of head office we will be passing the entries like receiving branch account debit means branch branch B account debit to branch A, receiving branch account debit to sending branch account. Again, in the books of sending branch and receiving branch, as we have mentioned, the entries would be passed under the name of branch and head office only. So the entry would be same: head office account debit to goods sent to head office account. It is the entry in branch A's account. And in the books of branch B, goods from head office account debit to head office account. To head office account. Is it clear? Is it? If there is any doubt, you can ask me. Okay. Incorporation of branch trial balance in the head office books. Just because an independent branch keeps full system of accounting and prepare its own final account doesn't mean that its year end result will not form part of final accounts of the head office. In fact, as in case of dependent branches, the profit or loss made by the independent branch shall also be included in general profit and loss account, which shows the profit accounts which shows the profit or loss of the company as a whole. Similarly, its asset and liabilities shall also be shown as the part of asset and liability of the company. This is done by preparing the combined consolidated balance sheet of the head office and its branches. What we do here is we just combine the accounts, means we just combine the accounts of head office and the branch and prepare one account for the same, so that we can include the remaining assets and liabilities of that branch under the name of head office. Thus, it becomes necessary for head office to incorporate the branch balance in head office books by means of suitable journal entries at the end of accounting period. So we have two ways for incorporating the branch balances into head office books. The first one is detailed incorporation. The first one is detailed incorporation, and the second one is abridged incorporation. Bridged incorporation. So let's discuss the first, detailed incorporation. What we do here is, suppose you are the head office, you are in the head office. What you need to do here is, you need to put or you need to pass journal entries for each and everything here. Means, if you are passing the general entry for trading account, branch trading account, then you need to pass the general entry for the debit side of trading account, for the credit side of trading account, one for the profit of the trading account, and if there were any loss, then you need to pass the general entry of the branch for loss of the trading account. So each and every entry must be passed here. And we just read the entries. For items on debit side of the trading account, because it was an detailed incorporation. So for items on debit side of trading account, branch trading account debit to branch account, branch trading account debit to branch account. For the items of credit side of the trading account, branch account debit to branch trading account, branch account debit to branch trading account. For branch gross profit, if there was any profit in the trading account, then branch trading account debit to branch P&L account, to branch P&L account. For items on debit side of the profit and loss account, if there were any loss, means branch profit and loss account debit to branch account, to branch account. For items on the credit side of P&L, after trading, we have the P&L account. So the entry for the credit side of P&L would be branch account debit to branch P&L account, to branch P&L account. And for the debit side, the entry would be branch P&L account debit to branch. And for branch net profit, the entry would be branch profit and loss account debit to general profit and loss account. And if there were any loss, the entry would be reversed. General profit and loss account debit to branch P&L account. For branch assets, the entry would be branch asset account debit to branch account. Branch asset account debit to branch account. For branch liabilities, the entry would be branch account debit to branch liabilities account. So we have an example for the same. On December 31st, 2018, the trial balance of Kanpur branch stood as follows. It is the trial balance. Stock है, it is the opening stock 12,000. Furniture 4,800. Debtors 11,200. Goods received from head office is 32,000. Salaries, rent and expenses, this will straight go to the P&L account, which is 4,400. Cash in hands, the an asset, it is 3,600. Head office account shows a credit balance of 22,000. Sales shows a credit balance of 45,600. Sundry creditors shows a credit balance of 400. And here the closing stock is provided to us, which is of cost 9,200. Pass the necessary journal entries to incorporate Kanpur branch balances in the head office books and prepare the Kanpur branch account in the books of head office. Okay, head office books. The journal, the entries we would pass. Wait, wait. So With the detailed incorporation, the first entry would have been passed for the trading account only. And for that, we needed to make a trading account as well. The entry of trading account, it would be Kanpur branch trading account debit to Kanpur branch account. This is the debit side. Now, for the credit side, the amount would be Kanpur branch account debit to Kanpur branch trading account 54,800. Kanpur branch trading account 9,200. Add this, and this is the opening stock 12,000. Goods received from the headquarter is must have sent to the debit side. When we add both of this, we get 44,000. And here we have passed the entry for the same for the debit side of trading account. Kanpur branch trading account debit to Kanpur branch 44,000. And the amount in credit side, let me add it. Sales 45,600. Sales we have made during the year is of 45,600. Okay, and the furniture, goods received, salaries, cash in hands, sundry creditors, 9,200. 9,200. When you add this closing stock and sales, you will get the credit side of trading account, credit side of trading account of branch. So the amount will come 54,800, and the entry for the same is Kanpur branch account debit to Kanpur branch trading account. Now, when you do a balance, the credit side is bigger than the debit side, so it will show a credit balance only, and it will show a profit. It will show a profit. So in that case, Kanpur branch trading account debit to Kanpur branch P&L account. And P&L account we are creating now. Kanpur branch P&L account debit to Kanpur branch 4400. 4400, this is the debit side. The general profit, the general profit is Kanpur branch P&L account debit to general profit and loss account is 6,400. 6,400. Entry for the assets. Branch closing stock debit. Entry for the asset side means the balance sheet entry. Branch closing stock account debit 9,200. Branch furniture account debit 4,800. Branch debtors account debit 11,200. Branch cash account debit 3,600. To branch Kanpur branch account 28,800. Now, for the liabilities, we need to debit the Kanpur branch. So, Kanpur branch account debit 400 to branch creditors. It is 400 and 400. This is the Kanpur branch account. Now you know how to create a branch account, so I'm skipping it. Now, bridged incorporation. You have seen the detailed incorporation. Now, we will incorporate the branch into the head office with the help of bridge incorporation method. Abridged means brief. Abridged means brief, means we will just pass the direct entry. We will just pass the direct entry, like we will not pass the entry of debit side of trading account, credit side of P&L account, credit side of trading account, debit side of P&L account, and then the P&L profit and loss. No, we just pass the direct entry of net profit and net loss of the account. Okay, just pass direct entry for the net profit and net loss, means the P&L account direct. So the entry we will pass is like branch account debit to general profit and loss account in the case of net profit. And if there were any loss, the entry would be like general profit and loss account debit to branch account. That's it. That is a bridge incorporation. That's it. As you can see this in the question, the same question, and the asset and the liability entry would be same. Now, closing entries in branch books. Closing entries in branch books. At the end of accounting period, the branch books have also to be closed. For this purpose, the branch can pass the usual closing entries for transferring all revenue items to its trading and P&L account and ascertaining its net profit or net loss. The amount of net profit and net loss should be transferred to the head office account by passing the following journal entries. Means we are closing the entries of branch books now. What would be the closing entries of branch books? And the profit or net loss would be transferred to the head office directly. So in case of profit, we just pass the entry profit and loss account debit, profit and loss account debit to head office. And in case of loss, the entry would be like head office account debit to P&L account, head office account debit to P&L account. We just transferred the loss or profit to the head office here. Sometimes, in case of when we transfer the asset and liabilities to the head office, the entry for the same is for the asset is head office account debit to assets account, and for the liabilities, the entry would be liabilities account debit to head office account. Liabilities account debit to head office account. This is a full-fledged question. Do it in your homework. Try to solve it in your free time. Please try to solve it. Okay, it is your homework. And one more thing, on Thursday we will be having the class on the same time, not 3 to 5 but 5 to 7. Okay,
Okay.
please inform other students as well and join the class on Thursday.
Okay, ma'am.
Okay, this unit has been complete with this question. We will be moving to the next block. Let me present it to you. Okay, just wait for a minute. Okay, this is the second last block of our subject. The second last block of our subject. It is related to consignment accounts. It is related to consignment. Anyone would like to explain what consignment is? Who will take the initiative? All right, I am taking the initiative here. Consignment. Consignment means, now think like that. Suppose you are the manufacturer of a product, you are the manufacturer or trader of a product, and you want to sell your goods. You just hire an agent. You just hire an agent who will help you to sell your goods, or will sell your goods on your behalf. So that thing is known as consignment. Means when you give your goods to an agent for the sale purpose, that thing is known as consignment. And being a manufacturer or trader means whoever person is hiring the agent means you will be known as the consigner, and the person who is agent will be known as the consignee. It could be a person, it could be an any kind of institute, or it could be any kind of firm who are here, who works as an agent. Okay, let's read the concept of consignment. When goods are sent by a manufacturer or a trader to an agent to be sold by him on commission basis, and at the risk and account of the 4-1, means the risk and account means the risk remains for the manufacturer only, they are said to be sent to the consignment. They are said to be sent on consignment. In other words, a producer or trader forwards his product to his selling agent appointed at different places to sell them on his behalf for an agreed commission. Means what an agent get against selling your goods. Okay, they are selling your goods. What are they getting? They are getting commission out of it. You have said to them that please sell my goods for rupees 1 lakh. Take these units of good, take these 100 units of good, and give me 1 lakh, or sell this for me 1 lakh. You will set a bar, minimum bar, for the agent. Now the agent will ask you to pay you the commission for each and every product. They will ask you a commission, and on that commission basis it will be given to that agent. That thing is known as consignment. What are the parties involved in a consignment? You know that in consignment the goods are sent by one person to another for sale purpose, for sale by later on behalf of the former. Therefore, there are two parties involved: the person who sends the good and the person who receives the goods, or whom the goods are sent. The person who sends the good means the manufacturer and trader is known as consigner, and the person who is working as an agent for you will be known as consignee, and this process will be known as consignment. This process will be known as consignment. Features of consignment. Features of consignment. Read it carefully. Goods are forwarded by the consignor to the consignee with an objective of sale at profit. With an objective of sale at profit. Second feature. Under the consignment, goods are to be treated as the property of consignor. As the property of consignor, not to be sold at his risk entirely. The consignee doesn't buy the goods, he merely undertakes to sell them on behalf of the consignor. Means consignee will not providing you the money, but he will just sign the document and become your sales partner, become your sale partner or the sale agent for the sale. He is similarly the consignee means the agent will be not responsible for any loss or even for any destruction or damages to the goods. It will be written on the contract that the consignee or the agent you are hiring will not responsible for any kind of loss, damages to the goods, even if they have done the damage. Then also they are not responsible for that damage. They will not pay you. The consigner doesn't sell the goods to the consignee. Therefore, he cannot ask consignee to pay the price of goods unless they are sold and the sale proceed are actually realized. The consignee agrees to sell the goods for the agreed rate of commission and is allowed to deduct his commission due from the sales proceeds. The agent enters into the picture only when he sells the goods and realizes the amount. He becomes indebted for amount realized on behalf of the principal. The relationship between the consigner and consignee is that of principal and the agent. Is that of principal and a agent. Any stock remaining unsold with the consignee belongs to the consigner. If any kind of stock or any unit of your product is remain unsold and is that with the consigner, that doesn't mean the consignee can take that stock and can use it for their personal use. He or she needs to give it back to the consigner. As the consignee act on behalf of consigner, the profit or loss on sale of goods sent on consignment belongs to the consigner. What is the difference between sales and consignment? Sales have two parties, seller and buyer. Consignment have two parties, consigner and consignee. Here, sale is not happening. Sales involve money. Sale involves money. Even though consignment also involve money, but the buyer is not providing the money to the seller here. Means the agent is not providing the money to the trader or to the manufacturer immediately. They are not buying the stuff. They are just getting the stuff so that they can sell it in the market. Here the relationship between the seller and the buyer is good and of creditor and debtor, but here the relationship between consignment is of principal and agent. Ownership. When you sell the goods, the ownership is transferred directly to the buyer. But in that case, when you give the goods to the agent, the ownership of that goods remains to the consigner only, means to the manufacturer only. Expenses incurred after sales of the goods borne by the buyer. You have bought of iPhone. Suppose you have bought an iPhone. Now you are the owner. If anything happened to that iPhone, that will be your expense, not the company's expense. But in this case, you have sent the goods to the agent. If something happens, if a fire happens, if a damage happen to the goods, then only you need to provide the expense for uh, the expense incurred on the behalf of consignee. Means consigner is entitled to provide the expense payment. Risk attached to goods sold is transferred to the buyer of goods as soon as the goods are sold. Here, the risk attached of goods consigned lies with the consigner only, to the manufacturer only, and some other differences. Important terms in consignment. Important terms in consignment. Proformal invoice. Since the goods sent on consignment cannot be treated as sales, the consigner doesn't prepare proper invoice. The consigner doesn't prepare proper invoice. He simply prepares a performer invoice and send it to consignee along with the goods dispatched. This is prepared with a view to inform the consignee about the price of goods, the expenses incurred, the modes of transportation, and the minimum sale price at which the goods are to be sold. Means consigner needed to set a bar for the agent that this is the minimum price. You can't sell my goods under that price, okay, or below that price. Here is the performer invoice. You can see it. Barber traders. Performer invoice. This is the address of Chennai for goods sent on consignment basis to whom the goods are sent. Ms. Hari Krishna Enterprises, Hose Khas, New Delhi. The goods are sent to Hari Krishna Enterprises, Hose Khas, New Delhi. And here are the details of the consignment. We have rupees 500 Bush radio sets at rupees 600 each. The cost is 3 lakh. Charges, packaging and cartridge charges we have paid for 4,000. Freight we have given as 3,000. Insurance we have done for the goods is of 6,000. And this is the 13,000 total. The total expense of these goods is 3 lakh 13,000. 3 lakh 13,000. Accounts sale. Account sales. As the consignee is an agent and is selling the goods on behalf of the consigner, he has to furnish the detail of sale proceeds, expenses, commission, etc. to the consigner. He furnishes all the details by means of statement called account sales. Okay, this is the account sales for the same. Account sales of 500 Bush radio sets received from Barber Traders, Mumbai. And this is prepared by Hari Krishna Enterprises. Sale proceeds 500 Bush radio sets sold at rupees 850 each. 850 each. So the amount have come 4 lakh 25,000. 4 lakh 25,000. And these are the amount of freight, octroi, go down rent and selling expense. It is deducted from this because all the expense needed to bear by consigner only. Whatever expense a agent is doing for selling your goods, it must be bear by consigner, by the manufacturer. That's why he have deducted it from 4 lakh 25,000. This is the actual amount they have sold the goods for. These are the expenses he or she have made to sell your goods, and the amount is 6,000. After deducting 6,000 out of 4 lakh 25,000, we get the amount 4 lakh 19,000. And here it is mentioned that they were entitled 10% commission on sales. 10% commission on sales. So the sales were made of 4 lakh 25,000, and 10% of 4 lakh 25,000 is 42,500. 42,500. Now the agent will deduct their amount from the same. They will not wait for you. They will not just give you the whole amount and ask you to pay these things. They will just deduct it here, and at last will pay you this amount. And one more thing is remaining. We have deducted the advances, means the bank draft balance due to Barber traders remitted as per drafted and closed. So 3,51,500 were sent to the Barber traders by Hari Krishna Enterprises. That's how consignment work is done. Is it clear? It's easy.
Yes, ma'am.
Okay. Now we calculate commission for two types. Okay, ordinary commission or special commission. Ordinary commission, when the question generally asks that The sales is provided, or commission is provided, 10% commission is provided on sales only. It is a commission usually paid at fixed percentage on gross sale proceeds. The term commission normally denotes ordinary commission here, unless specified otherwise. If the question doesn't say anything about commission and just say it is 15% on sales, it is 20% on sale, the commission is 5% on sale, then you will be considered that commission is ordinary commission. In case of special commission, in case of special commission, this commission which the consignee gets over and above the ordinary commission, it can be subdivided into two categories: overriding commission, or del cadre commission. Overriding commission or del cadre commission. What is overriding commission? Let's read it out. This is an extra commission allowed over and above the normal commission, and is generally offered when the agent is required to put in hard work, either in introducing a new product in the market, or where he entrusted with the work of supervising performance of other agent in particular area. This commission is also given for sales at higher prices than the price fixed by the consigner. Suppose the consigner have fixed the price for the goods they have sent on consignment is 700 rupees, but the agent have sold those goods for worth rupees 1000, means 300 more. So in that case, they will ask the overriding commission. Del commission. Usually, all the losses are borne by consignor. Sometimes the consignor expect the consignee should also be responsible for recovering the debts and bear the loss on account of bad debts. On account of bad debts, if any. In order to compensate him for this additional responsibility, he or she is given some extra commission called del cadre commission. Such commission is calculated on total sales, unless there is a special agreement to the effect that it is to be paid only on the amount of credit sale. We will take an example for both of them. Okay. Take this illustration. Rajdhani Cycles Limited sent 2000 dynamos costing rupees 50 each for sale on consignment basis to Banerjee and Company, Calcutta. Okay. Normal selling price per dynamo is rupees 60. Normal selling price per dynamo is rupees 60. Consignee is entitled to commission at 5% on normal selling price, 5% on normal selling price, 10% on additional commission on excess sales, 10% additional commission on excess sales. Third one is 1.5%, 1.5% on Del Cadre commission on total sales for guaranteeing collection of credit sales. Okay. Banerjee and Company reported sales of 500 dynamos at rupees 60. It was settled by the consigner only. 200 dynamos at rupees 75. It will entitle two type of commission, which is this 10% additional commission on excess sales, and 400 dynamos at rupees 75 each, and other 400 at rupees 80 each on credit basis. Compute consignee commission. Let's solve this. Write all the units and the amount. 500 units, the consignee, the agent have sold for 60 rupees, 30,000. 200 units for 75 rupees, means 15,000. 400 units for rupees 75 each, means 30,000. 400 units again for rupees 80 each, that means 32,000. When you do a total, the total sales are of rupees 1,07,000. 1,07,000. Now, normal commission. Normal commission. This point, this point is entitled for the normal commission only. Okay, for normal commission. And also this, because only 60 is done by 60 is considered by each and every unit. How many units he have sold? 500 plus 200, 700, 700 and 400, 1100, 1100 and 400, 1500. You need to take care of that as well. These are 1500 units, and we have sent 2000 units for the consignment, but we need to calculate only 1500 units, because only 1500 units are being sold by the agent. So let's do this. Normal commission. Normal commission is entitled by each section because the minimum he have sold of 60, which was our minimum normal selling price, and every other unit he have sold on a higher price, which includes 60 as well. So the normal commission on 1500 for 60 rupees is 90,000, means 90,000. This 90,000 belongs to this 1 lakh 7,000. So the amount 90,000 is entitled for, the amount 90,000 is entitled for 5% of commission, 5% on normal selling price. So 5% of normal selling price is 4,500. 4,500. Now the remaining amount. Additional commission 10% on amount realized in excess of the normal price. Amount realized in excess of the normal price. See here, the total sales value is 1 lakh 7,000. Normal sales value is 90,000. The remaining 17,000 have faced an excess value. They have faced an excess value. So we will put 10% commission on that excess sales value. So 10% of that 17,000 is 1,700. 1,700. Coming to the delicate commission, because they have the agent have put an guarantee, they given guarantee to us for the credit sales. Yes, 1.5% on total sale, 1.5% on total sale, because all the units are being guaranteed by him. So 1.5 means 3 by 100. 1.5 means 3 by 100. And the total sales we have made of 1 lakh 7,000. The amount comes 1,605. This amount we are providing to agent for the guarantee. Now, when you add all the commission amount 4,500 plus 1,700 plus 1,605, you get the amount 7,805 rupees. That's how a commission of an agent is calculated. Expenses, recurring expenses or non-recurring expenses. See, non-recurring expenses which are incurred for bringing goods to go down of the consignee are non-recurring in nature. Such expenses generally incurred on the consignment as a whole. And recurring expenses are the expense after the go down have reached the consignee's place or go down. They are recurring in nature because they may be incurred repeatedly by the consignor and the consignee. The example of recurring expense incurred by the consignor are advertising, discount on bills, consignor on collection of check, traveling expense, salesman, bad debts, and etc. And non-recurring expense which will not happen again and again, the expense which will not incurred again and again, are known as non-recurring expense. And these expenses are packaging, cartridge, loading charges, insurance, and freight. Once the goods are sent or received by the consignee and put it in the and they have put it in their manner, in their godown, in their wholesale area, then that from there recurring expenses start. Advance. Advance, it is a common trade practice for consignor to demand some advance from the consignee as a security of goods dispatched to him. It's not like you will just provide goods worth of 50 lakh rupees to someone you do not know. You will ask for advance. It may be in front of cash or bank draft. It may be in form of either cash or in form of bank draft, in the form of bills of exchange. So this is advance. I guess it is enough for today. We will be doing the accounting treatment in next class in next Thursday. Okay, what's the time at your area right now? You will be receiving the class. You will be joining the class on next Thursday and we will continue it from here. This upcoming Thursday I'm talking about. We will continue this class on this Thursday only. And we will start it from here, books of the consigner. All right. I'm asking something. Is it all right?
Yeah, it's all right, man. It's all right.
Yes, it's fine.
Or okay. Now please turn on your camera so I can take the attendance. All in one go. Please turn on your cameras. Wait a minute. Done. Thank you. Thank you for your cooperation. I'm concluding this class now.
Okay, thank you, man.
Thank you so much.
Wait a minute. We will meet on this Thursday only, okay? Bye bye.
Bye bye.
Hello, student. Just wait for 5 minutes for more participants. So then we'll start the session.
All right, noted.